Hello, my name is Julie O'Reilly. Welcome to our Junior Doctor Hub. Today I'm going to be talking to all things about getting your tax return ready for the end of the financial year. So we're talking preparing your tax return, tax deductions, and then what are you going to do with record keeping and all those pesky receipts. And let's get into it. So my first question I often get asked by junior doctors, do I really need to use an accountant or a tax advisor? Can't I just lodge it online myself through MyGov? So the reason I would suggest you engage with an accountant is you've got somebody who knows you, who knows what the life cycle of a junior doctor is like. We know what deductions that you're able to claim, and we make sure that we get every claim for you that you're entitled to. The other thing is, if you choose to lodge your tax return through MyGov, your tax return is due for lodgement by the 31st of October. By engaging a tax agent, you actually get an additional period of time to be able to lodge your return. So you get the whole way through till possibly May the following year to lodge your tax return and make any payment if you do need to. Of course, if you are in a refund position, we'd get that tax return straight in and get that refund back out to you. The next question that I get asked quite a lot is, what can I actually claim on my tax return? So the best place to start is if you head to the Junior Doctor Hub. We have a tax checklist there that's quite comprehensive that you're able to work through in terms of what items we're able to claim. Make sure you're keeping those records for us. But as a general overview, you're able to claim a whole host of different items. So you might be able to claim your car, you might be able to claim some stationery or other work-related items you've purchased, work-related equipment such as your stethoscope or an iPad that you've bought for work, your mobile phone, your laptop, all those sort of things. If you're not sure, make sure you're keeping receipts of all of those things and make me a note so that way when we do come around to preparing your tax return, you remember what you purchased it for and why you purchased it, and then we have a conversation about whether we can claim a tax deduction or not. So another question we get asked quite commonly is about your car. So a lot of people will come to me and say, my friends are claiming their car 100% and their accountant says it's fine. So there's two different methods that we can claim our motor vehicle expenses. The first method is we use the cents per kilometre. So what that means is we work out how many kilometres that you travel during the year. If it's less than 5,000 business kilometres, the cents per kilometre method might be right for you. So what that means is we'll just keep a log of just a diary note of how many kilometres that you do for the year, and then we use the tax commissioner's rate of 68 cents per kilometre that you're able to claim a tax deduction for. So that's a maximum deduction of $3,400 per year. So I did just mention the cents per kilometre method and using 68 cents. Now that is based on what the ATO issue that cents per kilometre at. So that is subject to change, and I know in coming tax years that's moved up to the 72 cent mark. The other method that you can use to claim your motor vehicle expenses is via a logbook. So what you need to do is keep a logbook for a period of 12 consecutive weeks. Once you've kept your logbook for 12 consecutive weeks, that will then calculate what your work-related use is for that car. So let's call it 78% is your business use percentage or your work use percentage for your car. Then you're able to claim 78% of all of the running costs. So the depreciation on the car, interest on any car loan that you may have, rego, insurance, repairs, petrol, all those sort of things. So again, making sure we're keeping those receipts, we've got that logbook, and once that logbook's been kept for 12 weeks, it is painful, but to keep logbook for 12 weeks means you're able to keep that for a 5-year period, unless your driving substantially changes. So another question we commonly get asked is, what about conferences? What can I claim in relation to my conference? So it's important you can claim your registration fee for the conference. You can claim your travel there and home. So that's the taxi to the airport, if we're allowed to travel during COVID. So taxi, the cost of the flights, a taxi at the other end, and then the whole lot reversed coming home. It is common for people to attend a conference and then take a bit of a holiday on the end. What the ATO look at is, what is the dominant purpose of that trip? Is it to attend the conference and you had a couple of days at the end enjoying yourself with family or friends? Then the dominant purpose is what prevails there. So that would be to attend the conference. Some of those accommodation costs would have to be apportioned, I suppose, to make sure that we're only claiming a tax deduction for the conference portion of that accommodation. So throughout my video today, I have spoken a lot about it's really important to keep your invoices, keep your receipts. So the life admin side of things is crucial to you being able to claim a tax deduction for those items. So what you need to do is keep a copy of your receipts. If possible, take a photo of them because receipts do fade over time. So take a photo of them and upload them to something like a Google Drive or a Dropbox that you're able to share with us at year end. If you do have a significant number of transactions and expenses, you may wish to look at using something like Xero. So Xero is a bookkeeping software that's in the cloud that allows you to attach those receipts into it, but totally not necessary at this point if you're not comfortable with doing that. So I hope that answers a heap of your questions in relation to tax deductions and preparing your tax return. But if you do have any questions, please feel free to reach out or have a look through our Junior Doctor Hub.